morning, and thank you for joining us today to discuss Weyland Tech's second quarter ended June 30th, 2020. Joining us today is Weyland Tech's Chief Executive Officer, Brent, and the company's Chief Financial Officer, Lionel Chong. They are joined by Logic's Chief Financial Officer, Rod Granero, and its Chief Technology Officer, Tom Furutawa. Following their remarks, we'll open the call to questions. Then, before we conclude today's call, I'll provide some important cautions regarding the forward-looking statements made by management during the call. I'd also like to remind everyone that today's call is being recorded and it will be made available for telephone replay following the instructions provided in today's press release. Now, I'd like to turn the call over to Weyland Tech CEO, Brent Sun. Please go ahead.
Thanks, Chloe. And good morning to everyone. Good evening to those who are joining from overseas. Before we begin talking about the quarterly results, I wanted to talk about something I think that we're all quite familiar with. Normal. What is normal? 6 months ago, if you told your boss or your colleagues, hey, I'm going to work from home indefinitely, and we can meet up on Zoom, is that normal? It is now. Instead of going to the gym, would you hop on your Peloton bike and get on with your virtual trainer? And so is that normal? Instead of going to the supermarket, would you order your groceries to be delivered? Instead of using cash or a card, would you pay for something with an e-wallet instead? Would any of that have been considered normal 6 months ago? How about stocks of companies like Zoom Information, Peloton, Shopify, SEA, Netflix, The Trade Desk? All of these have traded to new highs during a global pandemic, and they are all part of what is now considered normal. They also carry valuations of 13 times revenues, 22 times revenues, 56 times revenues for Shopify, and 83 times revenues for Zoom, because they are all part of what is now considered normal. This is how we do business, and this is how we live our lives. And these valuations support further expansion for further enabling what is now the new normal. At Weyland Tech, each one of our business units and our overarching strategy fulfills what is now normal. E-commerce, mobile commerce, e-wallet payments, ad tech, data analytics. They sound separate, but they're all the same. But none of them are reactionary to what is now the new normal. We've been doing them all well before any of this happened. Our business is thriving, and we believe that the best is yet to come. So for Q2, despite the challenges that have been created by the global pandemic, we made strong progress across every segment of our business around the world. This included realizing major gains in revenues and new e-commerce engagements for our newly rebranded Logic e-commerce operations in the U.S. Logic's larger and higher profile customers stepped up their activity during the quarter, resulting in revenue gains in every month of the second quarter. In Southeast Asia, we expanded our popular food delivery service, ATOS Go, from the commercial business district to actual residential units in Jakarta. Incidentally, Jakarta is thought of as a city which will soon become the largest in the world by the end of the decade, with a current population of more than 35 million. We also expanded the reach of Create App, our mobile commerce platform, as a service to Italy and other parts of Western Europe, where we are helping small businesses as the country reopens following the COVID lockdown. Subsequent to the quarter, we announced a major partnership with ShopeePay, one of Southeast Asia's largest integrated e-money services, and a unit of New York Stock Exchange traded C Company Limited. Incidentally, C is currently the largest market cap of any company in Southeast Asia. Together, we're launching a new marketing campaign for ATOS Go in Jakarta, as well as mutual integration of our mobile platforms. ATOS Pay, our mobile payment and e-wallet platform, has continued to log record transactions through its system, totaling more than 19 million in gross transaction volume this year, and has also grown every month during the pandemic. Our strong progress with these businesses and the major attention they've been receiving from companies like ShopeePay is why we're increasing our ownership of our Indonesian unit, Weyland Indonesia Perkasa, which is the local operator of ATOS Go and ATOS Pay, from the current 31% ownership to more than 51%. This will allow us to consolidate the revenue numbers for hopefully the current quarter. It also puts us in a better position to control any strategic alternatives that might arise as mergers and acquisitions and business in general in this region of the world continue to increase. On the Create App side, we've recently launched a pilot marketing campaign for Q3 and Q4 that has been designed to increase gross margins to more than double. We're aiming at 35 to 40%, and with that, we'll see a reduced R&D spend from our historical average of around 20%. That's been dependent upon resellers and has been a long drag on profitability. We recently expanded the digital marketing campaign into Indonesia following a high ROI pilot of this program in Taiwan, and we have many more exciting developments to cover today. But before we go further, I'd like to turn this over to Lionel Chung, our Chief Financial Officer at Weyland, and Rod Granero, our Logic CFO, to take us through the financial results for the quarter and first half. I've also invited Tom Furutawa, the Chief Technology Officer of Logic, on the call again to discuss the changes and progress with Logic in greater detail, as well as yesterday's announcement of an acquisition of Fixel AI. Afterwards, I'll return to talk a little more about operational activities and our outlook for the remainder of the year. Lionel?
Thank you, Brent. That was a good lead-in. Good morning, everyone. Earlier today, we issued a press release with the results for our second quarter of 2020. A copy of the release is available from the Investor Relations section of our website. Now, starting with our statement of operations for the quarter, our revenue totaled 9.3 million, up 30% compared to the same year-ago quarter. The increase is due to contribution of 3.7 million from our new Logic subsidiary, which we acquired on January the 8th. Our consolidated gross profit decreased 4% to 1.2 million, or 13.1% of revenue in the second quarter, compared to 1.3 million, or 17.7% of revenue in the same year-ago period. Our total expenses decreased 11% to 2.6 million compared to the same year-ago period. The decrease was primarily due to a decrease in G&A expenses compared to a higher stock compensation issuance from a year ago. R&D and sales and marketing, which was partially offset by an increase in depreciation and amortization expenses. Q2 net loss totaled 1.7 million, or 0.14% per basic and fully diluted share, compared to net loss of 1.7 million, or 0.48 per basic and fully diluted share in the year-ago period. Now, looking at our performance for the first half of the year, revenue totaled a record 24.3 million, up 55% versus the first half of last year. The increase was largely due to the contribution of 6.9 million from Logic. Consolidated gross profit increased 39% to 3.9 million, or 15.9% of revenue, compared to 2.8 million, or 17.7% of revenue in the year-ago first half. The reduction in gross profit is as a result of providing complementary services and discounting in an effort to retain our customers affected by COVID-19. Total operating expenses decreased 81% to 8.1 million versus the same year-ago period. The increase was primarily due to the addition of 2 million in G&A expenses from Logic, as well as an increase in R&D and depreciation and amortization expense. This was partially offset by a decrease in sales and marketing expenses. Net loss totaled 4.5 million or 0.38 cents per basic and fully diluted per share in the first half, compared to net loss of 1.7 million or 0.52 per basic and fully diluted share in the same year-ago period. Turning to our balance sheet at June 30, 2020, our cash and cash equivalents totaled 3.9 million. This compares to 3 million at March 31, 2020. The increase was primarily due to the cash included in the Logic acquisition. Without additional funding, we believe our current cash levels are sufficient to maintain current operations for the following 12 months. Now with that, I'd like to turn the call over to our CFO of Logic, Rob Coronero, to provide more details on Logic's financials. Rob?
Thank you, Lionel, and good morning, everyone. Given the impact of COVID-19, as we discussed in our last call, we were able to quickly adjust the mix of our demand partners and advertisers earlier in the quarter to suit the new online environment as stay-at-home orders swept the country. As a result, April turned out to be stronger than March and May stronger than April. Then June came in as our strongest June month ever, and this trend had continued through the summer. But now, let's dive into the numbers for the quarter ended June 30th, 2020. Logic's revenues totaled 3.7 million in the second quarter. This was up 2.7 million, or 261%, compared to the same period a year ago. The increase was due to higher revenues in traffic management and an increase in data monetization revenues, which represented a new revenue stream for us this year. This shift in revenue mix reflects our planned transition to a more data-driven company, with this presenting better gross margins than our legacy traffic management services. Overall, the impact of COVID-19 on our business was considerably less than expected. In fact, we were the beneficiaries of the transformation in consumer behavior as people stayed at home and began to focus more on their homes and home-related activities. Home Advisor and Queen Street, two of our larger and higher-profile customers, significantly step up their online marketing activity. These types of customers tend to be timely with their payments, which helps reduce our accounts receivable. Logic's gross profit increased 203% to 0.6 million, although as a percentage of revenue, it decreased from 18.4% to 15.5% in the second quarter compared to last year. This margin decrease reflects how competitive media costs have become as a result of COVID-19. Our total operating expenses decreased 7.2% from the same period a year ago to 1.5 million. The decrease was primarily due to a decrease in our general and administrative expenses. Net loss from operations was 1 million in the second quarter, which improved by 0.5 million from the net loss of 1.5 million in the same period a year ago. We believe this reflects an overall trend where we see getting to break even early next year as revenues continue to ramp up. Now turning to the first half results. Revenues totaled 6.9 million, up 33% compared to the first half of 2019. The increase was due to a large increase in data monetization revenue, offset by lower revenue in traffic management as compared to the same period a year ago. This shift in product mix during the first half of the year reflects our strategic transition towards becoming a more data-driven company, which has higher margins than our legacy traffic management services. For the first half of 2020, gross profit increased 47% to 1.1 million. As a percentage of revenue, it increased to 16.3% from 14.8%. This margin improvement was again due to the shift towards data monetization-related services, and we see this trend continuing. Our operating expenses decreased 6.3% from the same period a year ago to $3.1 million. This was primarily due to a decrease in our G&A expenses. Our net loss from operations in the first half was $2 million, which improved roughly $0.6 million from the net loss of $2.6 million in the same period a year ago. Looking ahead, we expect continued growth in our top-line revenues in the current quarter, primarily driven by data monetization. The third quarter has started off strong. July revenues came in over $1.3 million, and August is on a climb. So the current quarter is well on its way to beating Q2. Our annualized revenues run rate is currently at around $15.6 million, which means we're on track to meet or exceed previous guidance of $13 million to $15 million in revenues for 2020, with margins to improve to around 20%. We expect our expenses to remain flat as our revenues are growing, and we're monitoring it carefully. For the remainder of the year, we will remain focused on operational efficiency and margins, with the goal of turning cash flow positive by Q1 2021. This sums up our financial review of Logic. Now, I'd like to turn the call over to Tom Furutawa, our Chief Technology Officer. Tom?
Hey, thank you, Rob. And good morning and good evening, everyone. So as Rob described, we had a pretty good quarter, especially under the circumstances. And like most businesses, we did have operational challenges early on with the COVID outbreak. However, we were able to switch up our mix of verticals and focus on home improvement and health insurance, areas we were watching closely even before the pandemic. And now everything has accelerated with these since March. Our success has been largely due to how our platform enables meaningful connections between brands and the consumers they want to reach at scale. And when our data shows softness in certain market segments and strength in others, we can quickly adapt accordingly. For example, to follow consumer demand, we added new subcategories to our home improvement vertical, where we saw increased demand from new customers. We also saw increased demand in our health insurance verticals, especially in Medicare. We added Queen Street to our home improvement vertical, while Home Advisor has grown month over month since we started with them late last year. They say that now they have more supply of customers who need help with projects than they have contractors in their network to do them. Many other indicators are showing strong demand for renovation projects, including increases in construction permits. Our Medicare vertical has also seen activity, growing substantially month over month in Q2 and continuing into Q3. And we're planning to add additional coverage, which will drive greater efficiency. Now, similar to an auction, the more buyer coverage we attract, the more valuable our leads become. Towards the end of the quarter, we also saw a pop in our e-commerce vertical for consumer products. Now, during the quarter, we also made improvements to our infrastructure designed to support further growth and scale. In addition to display advertising, we improved our email and SMS systems with data enrichment features, all of which have improved our operations and efficiencies. As most everyone has come to realize, for effective online marketing, data is key. So we have continued to improve the quality of our customer data, the scale of the data, and the infrastructure that gathers and processes it. At the foundation of our platform is first-party audience data, which we collect from various sources, and to which we have applied our proprietary AI system to score the data. This enables us to reach the most engaging audiences. Talking about data enrichment and building engaging audiences brings us to the acquisition of Fixel that we announced earlier this week. We see Fixel's technology greatly complementing and enhancing our Logic X AI-powered consumer intent engine. This proprietary data system captures and directs consumers from multiple sources who are in the market to purchase a specific product or service, and it promotes engagement and conversion from major enterprises and brands. The addition of Fixel's platform allows us to accelerate our growth in several ways, including providing a more streamlined onboarding of customers through the web-based, easy-to-use interface. Fixel also provides us a field-tested, AI-based audience scoring engine, which can provide deep insights into audience engagement right down to ad placement. It can also expand and enhance the data in our audience platform, which contains data from our owned and operated properties, major partners like Oracle, and now Pixel. Altogether, these components allow us to increase our reach to quality audiences, making media buying more efficient. It is also important to note that the data we collect is predicated on permissions from both the consumer and our partners, since we uphold very stringent privacy policies. Logic can also leverage Pixel for its own branded website, and our clients can use Pixel within their own media efforts. Pixel's existing customer base is also complementary to ours, so we see many cross-selling opportunities. We've actually already begun to use Pixel's plug-and-play technology for scoring our data and building new audiences for remarketing. And we plan to fully integrate our two platforms to create even stronger overall enhancements and capabilities. So, the future is looking bright for our customer acquisition and consumer intent approach to the market. The more data and more patterns we develop, the more efficient and more ad space we can buy profitably. Meanwhile, we continue to explore other potential technology acquisitions, focusing on those which will support our data enhancement strategy. Now with that, I'd like to turn the call over to Brent. Brent?
Thanks, Tom. So as I mentioned earlier, we are increasing ownership of our Indonesia businesses, ATOS Go, the food delivery app, and ATOS Pay, our e-wallet app, from 31% to 51%, and we'll be consolidating the numbers in the coming quarters. As such, ATOS Pay, the e-wallet, the gross margins are around 1.5%, which is pretty much standard in that segment. ATOS Go, however, is operating around 12.5%. Together, they're generating a gross revenue run rate of more than $50 million on an annualized basis, so this is extremely exciting to us. The new partnership between ATOS Go and SEA's Shopee Pay will allow ATOS Go users to transact in-app using Shopee Pay, and through this integration, ATOS Go will benefit from literally hundreds of thousands of merchants and multiple millions of users who are already on the Shopee Pay platform. The launch of this new co-marketing campaign with Shopee Pay is obviously a huge win for us at ATOS Go and Weyland, and we believe it demonstrates our unique value proposition for both partners and customers, as well as shareholders. The mutual platform integration with Shopee Pay, and especially the new co-marketing campaign, which you'll start to see shortly, has raised our profile significantly in the industry and has actually begun to attract interest from other potential partners. Just over the past 3 weeks, we've had interest from institutional investors, both here in the U.S. and from overseas, mostly who are shareholders of Shopee Pay's parent, SEA. In addition to that, we've also attracted the interest of several super regional and multinational tech companies that are interested in partnering with us as well. On the Create App side, earlier this month we announced a new digital marketing campaign for Create App, both in Taiwan and then heading into Indonesia. If you look at our press releases from this past week and a half, talking about the launch in Taiwan and then subsequently into Indonesia, if you read them broadly, it might be easy to miss the real message here. The whole thematic wave of stay-at-home working and interacting has created within it two megatrends. The first is no longer having to meet in person, and then secondly, home-based businesses have become extremely popular. And as testament to that, I think it's important to point out Shopify. Their stellar rise in valuation, up to 58 times revenues. Further, we look at IPOs in that space. Just last week, BigCommerce IPO'd. Their bankers priced them at 11 times revenues, which they believed was a fair pricing. They traded to a high of 45 times revenues within 2 days. So why is this? It's because investors see the underlying megatrend and are paying up for it, thereby enabling those companies to expand further have the adequate capital to continue that expansion and thereby continue to offer relevant products and services. The team at CreateApp has transformed the entire marketing, sales, training, reselling, and support to 100% digital through the Taiwan pilot program launch, and the results are so much better than before that we immediately are taking the same approach to our Indonesia launch. If you look at our previous gross margins over the years, we have averaged around 17% and a fairly high R&D spend, which is exceeded 20% of revenues. So it was no surprise that our company has traded at lower than average SaaS valuation metrics. However, the new platform approach with 100% digital everything will command gross margins of more than double the current ratio, and R&D drops down significantly with that. So we believe that this sets the stage for becoming both profitable and attracting investors seeking typical SaaS company margins and outlook. So with that, if you look at Shopify, again, they carry roughly 41.5% gross margins. So heading up to 35-40% on CreateApp, we're starting to look a lot more like a typical SaaS model. And at our current valuation metric of around 2 times revenues, there's clearly a disparity between us and our larger peers. As Tom mentioned, the Logic business has provided a data-driven end-to-end e-commerce marketing solution for both enterprises and major U.S. brands. And in light of our shift to a more data-driven company overall, you might have seen that we filed an 8K last Friday to rebrand Weyland's corporate name. So we will be adopting the name of Logic at the corporate level, and we filed with FINRA and currently awaiting a new symbol issuance. With that, we will be rebranding all of our business segments accordingly. So you will see CreateApp be referred to as AppLogic. The current Logic business, formerly known as Push, and currently Logic Nevada, is becoming DataLogic. ATOS Go and ATOS Pay become GoLogic and PayLogic respectively. And our newly acquired AI business, Fixel, becomes FixelLogic and will also integrate into DataLogic. This rebranding not only reflects our transition towards higher margin revenues as a result of evolving into a more data-driven organization and one that continues to become more cohesive and interconnected over time. I'm sure that many of you are curious about our planned uplisting to a listed exchange. As with many things in the new normal era, it has been slowed by several factors which we continue to work through. However, it has not prevented us from having a recent attention paid to us by investors in our stock price appreciation. We do not have a precise indication of timing for the uplist right at this moment. However, there are alternatives that have come to us unsolicited from other exchanges, and we will be providing more details on them as they progress and come to fruition. Looking ahead, we're extremely optimistic about the continued demand for all of our products and services and continue to focus on making Weyland, soon to be Logic, an ever more commercially successful and profitable business. So with that, we can open up the call to questions. Chloe, please go ahead with instructions.
Certainly. If you would like to ask a question, please signal by pressing star 1 on your telephone keypad. If you're using a speakerphone, please make sure your mute function is turned off to allow your signal to reach our equipment. Again, press star 1 to ask a question. We'll pause for just a moment to allow everyone an opportunity to signal for questions. Thank you. Once again, participants, that's star 1 to ask a question. We'll take our first question. It comes from Chris Lacrossiere from Seeking Alpha. Please go ahead.
Hi, Brent. Thank you for taking my call. Congratulations on the past quarter, especially the milestones that have been reached recently. What I was especially excited about was the launching of really actually now launching Create App worldwide, and then the surprise of AR technology. I did a rudimentary analysis of the company, and I called you guys Davey, and you're basically up against Goliath out there. And a lot of big investors have contacted me, and their biggest question is, Chris, how can we compete? How will they scale? Has the company engaged investment banking? Money is everything, is what these guys are telling me. Has the company engaged SoftBank, RBC, Goldman Sachs? That's what this little company needs. Little Davey, if you will. Thank you.
Thanks, Chris. Good points. Incidentally, I see that we have been joined this time by a number of very highly regarded, if not the largest institutional investors in the world. So I'm guessing that they're microcap and SaaS focused analysts or portfolio managers are representing those firms. So thank you all for joining us. In terms of competing, when we started 6 years ago, looking around the landscape, there's clearly more new leaders today that 6 years ago were not necessarily leaders in terms of where they are now. However, they've gone public and have attracted hundreds of millions, if not billions of dollars. That is an extraordinarily challenging environment. But the view we took was not to compete. It was more positioning. And what does that mean? So if you look at where their sweet spots are and where their target demographics are, and you focus on areas that will eventually migrate up that chain and become important to them, then you can position yourself to become either a strategic partner or the recipient of a strategic investment or even an acquisition candidate. So across the board, everything we've done has never necessarily been to compete. It's been more to position. We're starting to see that a lot more frequently in terms of ShopeePay coming to us and several others. The feedback we've gotten from institutional investors once they start to understand the business. So that is the underlying ethos, if you will, of our approach to competition and positioning. As far as capital goes, historically we funded through the help of private investors. I see a number of participants here now, and we owe our success in great part to them by being supportive. Going forward, I think what is extremely important and pointed out to me by one of our bankers at Benchmark is that as we start to show up on the radar screens of institutional investors and potential strategic partners, they're going to look at the balance sheet. And having a strong balance sheet is paramount. Being undercapitalized is a mistake. Trying to be too conservative is also detrimental. However, we believe that we have navigated that very well over the past 6 years with modest capital, and putting ourselves in a position of being better capitalized will certainly enable scale that is greater than what we've done in the past. So I hope I answered your question, Chris.
Yes, thank you very much, Brent. Congratulations again.
Thank you. Thank you.
Once again, participants, that's star one to ask a question at this time. It appears there are no further questions, and at this time, this concludes our question and answer session. And I'd like to turn the call. Oh, we just had another question queue in. Would you like to take the question at this time?
Sure, please.
Perfect. The question comes from Mike Canna and he's a private investor. Please go ahead.
Yes, hi, everyone. And I wanted to congratulate you again on all the success, especially during the COVID times. And sounds like you guys are really hitting the rapid growth point here. My question is that, with extreme growth in the costs, when do you expect to see profitability in what quarter in the coming future?
That's a good question. I would answer that by saying, if you look at things on a larger scale, whether it be the companies that I mentioned in the opening, clearly they're considerably larger and have access to greater capital. However, if you look at profitability, you won't see it. You do see a roadmap to profitability that I believe on average extends out 2 to 3 years. So carrying huge valuation metrics of, again, anywhere between a low end of 10 to a high of 83 times revenues, there is clear institutional forgiveness out there for not being profitable currently. Profitability is important to us on our roadmap, and if you look at where we are now and where we're heading, I think that certain parts of our business can approach that more quickly than we had anticipated in the past. What I pointed out earlier about CreateApp being able to effectively double margins and eliminate a large R&D spend could very well take us to profitability within several quarters. Logic and Fixel and any subsequent tuck-in acquisitions we make, we will have an eye on those being accretive. And I believe the team there has done an extremely good job of managing growth and not overspending. And certainly you do not want to do this at the expense of growth. So going forward, we do intend to commit additional resources to that part of the business in order to scale as our peers have done. But we believe that as well can see break even in profitability possibly latter part of next year, maybe sooner. So I hope that answered it.
Yeah, that's great. Excellent. I've been investing in Weyland Tech for a couple of years now, and I have to say I'm very excited about my investment, and I do continue to invest in you guys. So I think the future looks bright, so congratulations.
Thanks, Mike. Much appreciated.
Once again, participants, press star 1 to ask a question at this time. Our next question comes from G. King from Intermountain. Please go ahead.
Hi, I'm an individual private investor as well. You have this incredible plan to expand and rebrand, and I was wondering what are some of the associated costs with that, given the significant exposure that Weyland Tech, the name, has received over the past few months.
Okay. Are you asking about the actual cost of the rebranding exercise, or what we believe to be possible detrimental effects given just the change in name and symbol and people maybe not being able to find us? Or is it both?
Yes, both.
Okay. Well, firstly, we did not engage a branding firm or anyone outside to do this. The team at Logic has significant experience in the ad space. Essentially, what we do at Logic at its core is what's called ad tech or advertising technology. So there is a tremendous amount of experience and skill sets in that. So the actual branding exercise was driven by them, and it is not purely just in name and in rebranding only. Everything that we've been doing in terms of operations under the previous brands continues to operate under those brands because those are already in place. By no means would we intend to change Create App in the segments that we operate as Create App in. ATOS Pay and ATOS Go, we're not going to rebrand those because that creates confusion. On a current and going forward basis, being able to rebrand and describe those existing business units in a very simplistic and straightforward manner is what we're aiming towards. So really nothing under the surface changes in terms of how they operate. They've been rebranded, and then if we go into new markets, we would go in with the new name or localize them as applicable. As far as creating the scenario where someone might not be able to find us, once we change the symbol, even if someone types in Weyland Tech, it will immediately forward them to our new name and symbol. And as we receive the information from FINRA over the next few days, we will have subsequent press releases and probably a special investor call to further detail our plans and not just saying it was a name and rebranding change.
Thank you so much. If I could ask a second question. In 2016 and through 2017, you guys had some significant higher valuations during that time, and has since been a little bit harder hit over the past 2 years. Could you go into what your expectations are going forward?
Sure, within regulatory reason. That's actually a good point. As many of you know, we've had a reasonable price rise in the past week, 2 weeks. Last Friday, I got a call in the morning from someone congratulating me on our share price expanding by 400%, which was nice. That same afternoon, I got a call from someone who's been a shareholder since late 2016, and he said that although he's pleased with the recent stock appreciation, he wanted to know how we're intending on gaining back the other 90% from the highs of early 2018. So yeah, I would point out that we did have a somewhat smaller share base. However, at the peak, our market cap was roughly $200 million. At that time, the business was tracking at a trailing 12-month revenue rate of about $15.6 million, and we were only operating with Create App and had just started with ATOS Pay. If you look at us now, we've got roughly a $100 million market cap. We have the addition of Logic and now Fixel, both of which will add considerable value in terms of product and service offerings, and certainly financials, as well as ATOS Go, which we launched last year. So does that imply that we should be trading at a more normalized valuation, even a quarter or a half of what our peers trade at? I hope so, but that's really dependent upon opening up the audience to more retail investors who look at us, do the due diligence and make decisions upon that, and certainly the addition of institutional investors who have been drawn to us by our partnership with Shopee Pay, and are starting to conduct due diligence on their own. So we're very optimistic and extremely excited.
It appears there are no further questions, and at this time, I'd like to turn the call back over to Mr. Sun. Please go ahead.
Actually, Chloe, I believe there's Mr. Tim Brower who has a question. I can take one more.
Absolutely. We'll take his question at this time. Mr. Brower, please go ahead. Caller, your line is open. You may be muted.
Yes, I think I'm unmuted now. Can you hear me now? Can you hear me?
Yes. Hey, Tim. Yes.
Great.
How are you, Tim?
Thanks. Very well, thanks. Calling from Cheltenham in the UK. Most beautiful place in the world. You must come and visit sometime. But enjoyed the presentation that was on the Wall Street Journal yesterday, which I saw. Really enjoyed that. So that was a good update. Obviously, somebody asked a question there about the uplist and the progress of that and the timescales for that. But can I also ask that question, but also add to it what other alternatives you are considering in order to become uplisted to a more senior index so that we are able to see institutional investors and a wider audience for the shares, which will hopefully be reflected in the share price?
Sure. That's a good question. Just providing context on the application with NASDAQ. I'm not sure if many know this, but there were 5 examiners at NASDAQ, of which there are now 4. All of them have responsibility for IPOs, which the IPO calendar has been quite active lately. Also continued listings of currently listed NASDAQ stocks, and then third uplistings, of which on an annual basis 200 to 300 companies make the attempt, and usually only 20 to 30 make it out, and that's mostly due to just internal bandwidth constraints at NASDAQ. We have been in a fair amount of time. It is frustrating. However, with the recent appreciation in share price and the announcement of our partnership with ShopeePay, we have been talking to several other exchanges. It's possible that with our Indonesia division, we could possibly even IPO in Singapore or Jakarta. We've looked very carefully at the TSX and the NEO up in Canada. We've had discussions with NYSE. So any of those we believe would offer a good alternative. And so we will be updating a little more closely as we progress there.
Any further questions, participants? You may press star 1 on your telephone keypad. We have Edward Goshinsky on the line as a private investor. Would we like to take his question at this time?
Sure. Yes. Yes.
Hey, my question is, with the reduced amount of shares due to the reverse, how are you going to supply stock to major institutions who might want to buy enormous amounts of stock? That's my question.
That's a good question. Thanks, Ed. I think a lot of it depends upon what the supply demand looks like. It's tough to answer that in a very short discussion. But I believe that what we would see is initial positions being established if there's interest, and then follow-ons as they see us progress. I would also say that given last year's lack of upward price movement, there are a number of what we would define as fatigued shareholders who've been with us for some time, I suspect that on the rise in price, they would probably be looking to exit, thereby bringing in a new audience. But we'll see. Our float's relatively small, but that could be solved. And certainly conversations that they have with us about that, we'd be able to probably structure something along those lines. But we'll take it as a case by case basis. But I think overall the liquidity will find itself. All good?
We do have Timothy Brower on the line once more. Would you like to take his question at this time?
Sure. And we can wrap right after.
Absolutely.
Hi, Brent. Sorry, all it was just, it was regarding the institutions again. Are the institutions able to invest at the moment, or are they limited, by the fact that they're not able to invest on junior indexes? Is that something that you've got a plan to get around, or is it simply just a case of, one thing that I did ask before that I don't think really you answered was, if the NASDAQ uplist isn't possible or even a different index, is there another vehicle in which you can do it, a merger or a sort of overtaking of another company, for want of a better term?
Sure. Let me address both of those. The conversations that we've had so far with institutional investors, I would say that there is, I wouldn't say it's concern. I would say that it's a topic of discussion about being listed on a market versus an actual exchange. However, no one has said we cannot buy shares because you're on the OTCQX. On the individual shareholder level, we are blue skied in 47 states. On the institutional side, if you look at the OTCQX, I believe there's just a little over 200 companies on the QX, most of which are American depository receipts of very large multinationals. I'm sure you're familiar with Imperial Chemical out of the UK. They're on the OTCQX. Nestle, Roche Pharmaceuticals, BNP Paribas, Walmart de Mexico, Adidas. There are a number of multi-billion-dollar market cap companies that trade on the QX. So for an institutional investor to desire to buy shares of Weyland on the QX, I would say that the majority of them can do so if they have a compelling reason to. So I hope that answered your first question. The second, we have indeed looked at other alternatives. We've looked at SPACs. We've been in discussions with them. We've looked at spinning off a business division through an IPO onto other exchanges. And those are ongoing. But for now, we are focused on the business. And then parallel to that, we will continue to seek more liquidity through an exchange listing.
Thank you.
Thanks, Sam.
And that signals the end of our question and answer session. Mr. Suen, please go ahead.
Great. Thanks, Chloe. Thank you, everyone, for taking the time to join us on the call today. And definitely the new participants. It's nice to see some of the names of institutions on here. So thank you. The key takeaway is that we are living in a time where normal is vastly different from just 6 months ago. So living and working have taken on very different meanings. And this has created a thematic wave of investing that has propelled many companies in e-commerce, mobile apps, data, ad tech, fintech, healthcare, and consumer products into valuation metrics that far surpass historic norms. You look at NASDAQ hitting new highs, and this is driven by companies that provide the things to us on an everyday basis that fit this new theme of normal. Weyland Tech, soon to be Logic, operates every line of business within that theme. With the interest from global partners on our Indonesia business, a revised strategy with CreateApp, carrying higher margins, and then overall evolving into data with the addition of Logic and Fixel, we're just getting started in terms of our uptick in growth. So thank you all again, and all the best. Thanks, Chloe. Please wrap up.
Before we conclude today's call, I would like to provide the company's safe harbor statement that includes important cautions regarding forward-looking statements made during today's call. Statements made by management during today's call may have contained forward-looking statements within the definition of Section 27A in the Securities Act of 1933 as amended, and Section 21E of the Securities Act of 1934 as amended. These forward-looking statements should not be used to make an investment decision. All statements other than statements of historical fact included herein are forward-looking statements, including statements regarding the continued growth of the e-commerce segment and the ability of the company to continue its expansion into that segment, the ability of the company to attract customers and partners and generate revenues, the ability of the company to successfully execute its business plan, the business strategy plans and objectives of the company, and any other statements of non-historical information. These forward-looking statements are often identified by the use of forward-looking terminology such as believes, expects, or similar expressions, and involve known and unknown risks and uncertainties. Although the company believes that the expectations reflected in these forward-looking statements are reasonable, they do involve assumptions, risks, and uncertainties, and these expectations may prove to be incorrect. Investors should not place undue reliance on these forward-looking statements, which speak only as of the date of this conference call. The company's actual results could differ materially from those anticipated in these forward-looking statements as a result of a variety of factors, including those discussed in the company's periodic reports that are filed with the Securities and Exchange Commission and available on its website, www.sec.gov. All forward-looking statements attributable to the company or persons acting on its behalf are expressly qualified in their entirety by these factors. Other than as required under the securities laws, the company does not assume any duty to update these forward-looking statements. Before we end today's conference, I would like to remind everyone that this call will be available for replay starting later this evening and running through August 28th. Please refer to today's press release for dial-in replay instructions available via the company's website at www.weyland-tech.com. Thank you for joining us today. This concludes today's conference call. You may now disconnect.